So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips rocking and rolling here, 16th of September, 2018. No trade calls, no recommendations. You and only you are responsible for the trades you may decide to take. So, what's happening here? Well, I think we're going into a very interesting 2-week period. Basically in terms of volatility and event risk, it's all about this China and U.S. tariff wars, depending on what we're going to get, on deck. We don't know. It's just all headline risk. I mean, apart from that, in terms of the actual data calendar, we've got a lot of central bank speaker this week. I mean, we've got some stuff out of Australia. We've got Draghi speaking twice. We have a BOJ press conference. Not a lot of people are going to be expecting a lot this week, and again, we do have some data points here and there, but it's all setting up for next week, where essentially what we're going to have is we're going to see the FOMC on the Wednesday, with also the RBNZ. So again, should be interesting 2 weeks ahead. Keep in mind that also in terms of seasonality, we're going into a weaker period in September. September tends to start strong and then it dies down a little bit. If you look at something like the Dow, the week following triple witching has been down like 21 out of 27 of the last time. So traditionally the back end of September is a little bit weaker. And so as we said, this tying in with all the headline risk, with the headlines we've seen out of China, from Trump coming out on Friday, possible retaliation out of China, the fact that they're not going to want to sit down. We still have NAFTA talks ongoing. We could still have headlines on Manafort. There's just an awful lot of event risk. And as we've been saying, there's an incredible amount of complacency out there. And all of this in a situation where the market is still very long the USD. And if you look at something like recent exposure to vol, market participants are 3 times as short vol as they were in the whole February VIX debacle. So clearly things are setting up for some very interesting action. Also, if you keep in mind, the weakness we've seen in specific tech names breaking down. So again, it should be an interesting end of the month. At least we're looking for a very interesting 2-week period. So as we said here, if you look at just looking at some charts, if you look at the VIX, our base case is still that, we're kind of hovering here, but this is all setting up a spike at the very least to the 20 mark, if not much higher. If you look at the equities, if you're thinking about in terms of short opportunities, clearly it's tricky to blindly fade strength, but our preferred short on the indices, I mean, even though we'd expect to get a better bang for your buck on tech, is still the Russell, because it's the one that's holding it. Russell just behaves in a funky kind of way, but you see how we're still stuck and we haven't really regained those highs. So if we were to roll over across the board, this is an extremely interesting risk for a nice reward if we really get a roll. So we'd keep a very, very close eye on the Russell. I mean, in terms of all those tech names, I'm not going to go through all those charts again, but you also see what happened to AMD towards the end of the week. But if you want an easy one to keep an eye out for, you can keep an eye out on Google. I mean, keep in mind that unless the two generals roll, right? So unless Amazon and Apple really roll, it's going to be difficult for the market to get very heavy. But, we start to see those headlines hit on Apple towards the end of the week. So it's really going to be interesting if we get follow through. But as far as we're concerned, especially now that we've broken back down below this previous high on Google, if those headlines start to risk and we get some risk off, we would really not be surprised to see a very quick move back into the 1,000. Now again, because of that, those headlines on China really, a lot of people scratching their heads on what's happening on gold, what's going on USD JPY, but really It's all a USDCH trade, right? And you shouldn't be surprised. You see how this is stuck doing nothing? Even though it can be volatile, it's kind of stuck doing nothing. Well, surprise, surprise, let's look at Euro. Right? It's kind of stuck doing nothing now. So it's a really tricky situation because it's likely going to be headline driven. So instead of looking at the specific pairs, what I think it makes sense is to continue to focus on the DXY. Now, keep in mind that, as we said, the market is still overly positioned long TXY, and the only thing I wanted to say in terms of skewed positioning, we talked about this, and we were looking for USD CHF and later on Kiwi to break. And see how stubborn that USD CHF was, but once it broke, you see the unwind coming in. So don't forget that in terms of, you've got very similar situation on Kiwi. And even though it's hovering at these lows, and it could take a while to actually base because it's still holding heavy, once this finally bases, we expect the unwind of this move lower, which has been a very aggressive move over, right? Pretty much since the 74s all the way into the 65. We expect the unwind to potentially be very violent. Now, it doesn't mean that, even if it's violent, it could really retrace even 500 pips and still hold a move down. But just keep in mind, we would be cautious about getting stubbornly pressing these at these levels on the short side. So again, going back on the DXY, what's going on the DXY? Well, I think here we're getting in a situation where even the bulls are gonna have to revisit the bullish case, right? Our base case is still bearish, and our base case is still that we have to come back into these 92s, 9260s, 92s, as this is the pattern that's trying to play out. And what is going to be very telling, and we think this is the easiest way to look at it. Don't make it harder than it should be. On the weekly, you've got the 100 and the 200 to the upside, and you've got the 50 to the downside. As long as we trade in here, it could just be a lot of velocity of move inside range. If we trade back above, break above, and the bears are going to have to change their view. And probably you'll see a lot of covering, and this will likely happen very aggressively. If we get a day close or a week close below this level, the bulls are going to have to change their view, and you're likely going to see this happen very aggressively. But as long as we trade in here, it's still choppy. Now, even in the choppy assumption, we still think that it has to resolve lower, even if it's going to continue to stay choppy. So that really hasn't changed in terms of our base case. Now, the other thing you want to keep in mind, there's still there are a lot of different indicators that are showing you that the market is just not sitting too pretty, and these things start to build up. Whether you're looking at the different omens, whether you're looking, people are talking about DMARC counts or whatever, but look at how bank is, NASDAQ Bank. Look at how this is behaving. Keep an eye on this because it looks like it's going to try and bounce here. What's going to be very interesting is if you see any bounce that can't get any traction, then that could be setting up the move down. It's very ugly action. As we always say, GS always knows, Goldman always knows what's going on. Look at the Goldman chart. Now, this is not really pretty. And remember, the bigger picture for us, this hasn't changed. We've been looking for this to come all the way. Well, we were looking for this once we broke. Oops, I don't know what happened here too. It looks like TradingView is playing up. Once we broke down, we were looking for these 1219s to print, which we got. But look at what's happening here. Highs into those lows. These moving averages are holding here, so that's what this is likely pointing to. So, and again, I'm sorry, it looks like this TradingView is playing. Oh, there it is. It's just finally come up. This is what looks like is trying to play out. So you're getting a lot of signs of things just not looking too perky in a situation where risk is building, headline risk is building. We're going into a traditional seasonally weakish period. We're going to start to get earnings. So we're going to see the stock buyback blackout period. So there's going to be less of that natural bid in the market. So there are a lot of things to factor in, a lot of things we have to be cautious with. Now, again, and I was discussing with some people, not a lot has happened. You can see with these updates, we're always looking at the same things, right? But especially for, go back and put it into context. If you're a currency trader, get on that DXY and you can look at the USD CNH, you can look at the Euro, you can look at whatever chart you want, get on the daily. Now, why are the updates pretty similar? Because we haven't really gone anywhere. Right? We attempted to break higher, but we haven't really gone anywhere. Right? We're still stuck here. And you can argue this is topping, but see how in terms of range, market's really not going USD CNH. Market's not really going anywhere. USD JPY. Market's not really going anywhere. So the market is waiting for some kind of a catalyst, and unless you get there, you have to be patient. Now, what's going to be interesting also is to see how we open up today. ES right at those highs. Any sell-off, clearly there are a lot of places where this could get bid. So unless you get something ugly with that VIX or some nasty headline, your base case would still have to be that you'll find some kind of support. But for now, the message is nothing has changed. We're still very, very complacent. There's a lot of headline risk, and we're going into the seasonally weaker period. This earnings period, you're going to have blackout of these stock buybacks. So everything to us points to potential for weakness in the market. Now, even though this could catch a bid, as always, market can go up, down, or sideways. Regardless, we still think that in terms of velocity of move, the real risk is to the downside, not to the upside. But the big question mark is going to be the dollar and all these headlines we're likely going to get out of Washington, out of tariffs, out of Mueller investigation, whatever. So it's not a particularly easy market to trade. It's not a particularly rewarding environment. It's pretty frustrating, but we have had plenty of opportunities in September. It's just a tricky one. Okay, guys, have an awesome one. Talk to you guys soon. Take care. Bye-bye.